Hey, Joe Carrig with the Carrig Real Estate Team, and this is your San Ramon Valley update for the week of May 29th. Yes, almost June. We're going to talk about today, what are the spring drivers? What's driving the market this spring? Well, number one, existing home sales. You can see with existing home sales, they were going down and down and down and down from when they raised the interest rates last year. And now they peaked up. Now they've gone down a little bit going back to April. But that is the only reason they're going down, as you'll see when we get to the graphs, is because there's no inventory out there to buy hardly. So sales are actually going down, but it's not because of supply. It's not because of demand. It's because there's just not enough supply out there. So that, obviously, home sales are one of the drivers. The second thing is affordability. Well, you can look at this graph, and when you look at the interest rates recently going up again, and the home prices actually went down 20%, but went back up 10% the last couple months, the affordability is at a historic low. So, in other words, it is so hard to purchase a home. When you look at this graph, you'll see the orange. Well, the orange was basically during, the 2009, 10, 11, 12, when homes were at their lowest. And then you see it kind of bounce back and forth. Then you see it went down in 2022. Well, it's even less now. Even though prices have dropped a little bit, with the rise in the interest rates, the affordability is just not there. So not only is there not enough inventory, but with the interest rates and the prices not going down like everyone thought they were going to go down, the affordability is still really tough. So that's one of the drivers also. What about inflation? Well, when you look at the inflation, it shows signs of some moderation. I mean, it peaked at 8.9 and now it's down to 5. Because remember, what happened during the early 2000s after COVID is we were into a recession because of COVID. So what the government does is they lower the rates to spur the economy. The problem is the real estate market was already red hot. Remember, February of 2020, before COVID, right before COVID, we had our best February in 13 years. So the real estate market was already hot. So literally, when they lowered the interest rates to spur the rest of the economy, it was like pouring gasoline on a fire, and the real estate market just took off. And then it caused so much inflation, as you can see, up to 8.9%. The Federal Reserve stepped in and go, oh my God, no, we have to now raise the interest rates, which for the second half of 2022 basically stalled the market. You can see it going, and slowly but surely it worked. Inflation was going down, 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 down. So now we've seen a little peak in the interest rates again because, and this is just a temporary thing, is because of the debt ceiling that Congress is fighting over right now, and hopefully that will pass and we'll get some better inflationary numbers which will lower the rates down. So they went back up to 6.5 to 7. Well, now, we're hoping to 5.5 to 6%, which will be looking pretty good for the buyers. But the bottom line is inflation has moderated, and so what the Federal Reserve has done has worked. They just have to not overdo it because of something like the debt ceiling, which is only temporary. So again, that's one of the drivers of the market. You can see how the lower mortgage rates are likely ahead, and you can see they went up, they're going down, they peaked up a little bit, but we expect in the next few months for them to go back down. So how's the market looking? Well, exactly like I mentioned, there's just no inventory on the market. Look at San Ramon. Now, normally this time of year is where we see more inventory coming on the market, and we always look at the absorption rate of, is it being absorbed? Well, you can see with San Ramon, the inventory is going down, 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 and the pendings are going up, up, up. So, I mean, you literally have 68 pendings and 44. Remember, it's a huge seller's market if they're even. Even if there's a lot more listings and sales, it's still a seller's market. When you have basically an inverted curve like this, where you have many more pendings and you do active properties, the market is just nuts. It is absolutely a seller's market. We need more inventory. The Danville market, you see the same thing. Look at basically the market going, the actives going down, 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 and the pending staying about the same. To now we got to a point where, look at, first time in a long time, probably since last year, in Danville there's as many pendings, 56, as there is active properties. That is nuts for this time of year where we're seeing more inventory. But Why isn't that inventory coming on? We've talked about it before. It's because people are sitting there with 3% interest rates. And yeah, sometimes people pass away, they downsize, they get a job out of state. So the homes that are coming up are people who need to move. But no one's moving just to move and going from a 3% to a 6% plus interest rate. Because even if they went out and sold their home for $2 million and bought something for $1.5 million, their loans are still going to be higher than they are now just because of the interest rate. Blackhawk market, you can see it's seemed pretty steady, but you see the pending sales are up. And again, the inventory is down across the board. Well, look at the Alamo market. It doesn't get much more consistent than this. The last 3 weeks have been almost identical. But again, you got an average price in Alamo of $2.5–3 million. So you have 37 active properties, 21 pendings. That would still be considered a seller's market. And then you have Dublin, which is absolutely nuts. Look at the inventory going down and pendings going up. So you literally have 55 pendings, 26 active properties, more than twice as many pendings as you do active properties. So San Ramon and Dublin especially are just going nuts because there's so many people from the South Bay, and Dublin and San Ramon is where they're moving to. So those are the two hottest markets right now, is Dublin and San Ramon, as you can see. But obviously Danville is kind of getting a spillover of that also, along with Blackhawk and Alamo. So when you look at sold price to list price, I always say, look at the San Ramon Danville, San Ramon Dublin. Remember I sat there and said those are the two hottest markets? Well, look where they are, 105% of asking. So almost everything's going for more than asking. Danville, 99%, that always has stayed around 100%. There are no closings in Blackhawk. And then even Alamo, 101%. But again, with Alamo and Blackhawk, you only have 1 or 2 closings a week. So those are, you don't really go by that much. But as I mentioned, the hottest markets are basically San Ramon, Dublin, and you see it in here. And the average days being on the market is under a week in those areas. Remember, every market's a little bit different. If you're a buyer, I would still be a buyer in this market, but you need to be a smart buyer. Remember we talked about marry the house and date the rate. So take the rate, take it for a 5-year fix, and I guarantee you what the government will do as they work us out of this recession they're pushing us into with the higher rates, they'll lower the rates down. The last 6 recessions, rates have gone down in every recession. And in 5 of the last 6, prices have either stayed the same or gone up. It's only the Great Recession of 2008, which real estate drove us into, that prices have gone down. So if you're a buyer, I wouldn't wait for that recession, because what it's telling us is 2 things. As we get pushed into a recession, interest rates will go down and home prices will go up. So jump in there while you have the opportunity. Now, if you're a seller, well, you saw by the graphs, very little competition out there. Prices are almost going for what they were at the peak, and in some cases, going beyond what they were selling for at the peak. But again, every home, every neighborhood's a little bit different. With any other questions, give me a call, Joe Carrig, 925-487-6838, or drop me an email at joe@carrigteam.com, and visit our website to see 3D walkthrough tours of every one of our listings and to learn a little bit more about the Carrig team, www.carrigteam.com. Make sure you subscribe and tune in, because we're going to see a lot of things happen with the market with both the interest rates and the supply and demand. Have a great week.